the screen is visible, definitely.
Okay, sir. Krishna, can we start?
So, which, this thing you're starting, which,
Yeah.
So we've taken the Indian logistics industry. So the first,
Indian, which industry? Container
so
Corporation?
logistics,
Okay, logistics,
logistics.
logistics. Very good.
Yes, sir. So we have taken a mixture of logistics industries that do shipments, that are only that did the companies who do their logistics by road and mixture of road rail. So we've taken a total of seven companies, and we'll be presenting our analysis. So first and foremost, the summary of logistics industry and why we feel it is very interesting is because first it doesn't get the spotlight like tech and consumer brands do. And what people need to realize is that logistics is the backbone of the economy. So
Yeah.
without it, the e-commerce, manufacturing, and even the healthcare industry would grind to a halt.
Yeah.
uh, Currently, if we look at the growth, the Indian logistics market is already $228.4 billion and is projected to reach almost $360 billion in the next 5 years. And that's an additional USD of almost 129 billion of dollars, which is a good opportunity.
Mm.
The reasons why we feel this growth is significant is because the e-commerce industry is booming. We've had government infrastructure investments and global manufacturing shifts towards India, and of course the formalization of the economy under GST.
Mm.
And India's size and diversity also make logistics very highly complex, requiring companies to operate seamlessly across mega cities and rural areas alike.
Okay.
And recently, sir, there were also key changes for logistics and goods movement when the GST changes were made. So, freight and multimodal transport services. Multimodal transport services is excluding air. So, water, road, etc. So, so freight and multimodal transport services have had their GST reduced from 12% to 5%,
Mm.
and GST on goods that are carried out by trucks has been lowered from 28% to 18%.
Okay.
And one more interesting fact
Come
is
again, this I couldn't get you. What you said last in the current GST,
yes, sir. So,
so
sir,
what has
in the
happened?
current GST, the goods that are carried out by the trucks,
Yeah.
that has been lowered from 28% to 18%.
Okay.
And multimodal transport services where goods are transported from truck, then they go to the railways, and then it's carried out by rail, that has been lowered from 12% to 5%.
Okay.
And GST on third party insurance for goods has dropped from 12% to 5%.
Okay.
So
So, but
these,
one thing
yes,
I just noticed that the India CAGR growth is 7.7%, whereas the world it is 7.2%, isn't it?
yes, sir, yes, sir,
So normally India is growing at a much faster pace compared to the global, elsewhere, basically. So here it is showing just a difference of just few basis points. So anyway,
yes, sir.
that was my comment. But anyway, I think you got it from the AI. Okay.
Yes, sir, because CAGR, we tried calculating the CAGR, but there wasn't sufficient data. So this
No,
is
no,
one
no. This way
metric
we'll
we've.
get a ready-made from the, when you put it in a chat GPT, so they'll give you these numbers basically, isn't it?
Yes, sir. Yes, sir.
Okay, okay.
Sir,
Just,
but all
yeah.
other data, we've following up the news and what, because I am personally invested in one of the companies in the logistics industry.
Okay.
So
So
rest
what's
of
that
the
company
data
name?
is,
Where it is?
sir, we'll be coming to that.
Okay.
So this was the summary, and now Krishna will talk about the market share.
Okay, good. The topic is good, and the industry is also very relevant. As you said, that it is a industry which has a great future. Okay, so it's a backbone of the Indian economy for any
Yes, sir.
economy as such. The logistics have done very well, and you have chosen companies like Container Corporation of India. Okay,
Yes, sir. This
then we
is
have chosen
government backed.
Delivery, and then Blue Dart, TCI Express via Logistics Transport Corporation of India, then Gati. then Mahindra Logistics. Okay.
Yes, sir.
Which is the market leader? Basically, Container Corporation has the market share of 65%, isn't it?
Yes, sir. Container Corporation is the leader because they are government backed.
Ah, this is government backed. So I've been to the Container Corporation, office in Mumbai, and we were doing a lot of business when we were, importing goods and exporting goods, and we were receiving a lot of containers from them basically. So we had a long relationship with this company. Okay.
Yes.
Yeah,
Christoph.
so yeah, I will continue, sir, from the market share slide. So, talking about the Container Corporation of India, it dominates container rail freight with a 65% market share. Six of every 10 trains moved by train, the 10 containers moved by train go through them. Their core businesses is long distance rail container
So
transport
just be
supported
near
by.
to your mic because your voice is suppressed a bit, little bit.
Hello.
Yeah.
Okay, sir, is it fine now?
It's okay now. Please go ahead.
Yeah, their core businesses is long distance rail container transport, supported by inland depots and multimodal solutions, which can be like train, truck, or ship.
Yeah.
As the crowned railway cargo king of India, Concour's edge comes from government backing, first mover advantage, and high entry barrier in capital heavy rail logistics.
Okay.
Now, talking about delivery, it holds a 20 to 22% in India's e-commerce logistics, making it a key player in online shopping deliveries. Its services span parcel delivery, truckload transport, warehousing, and full supply chain management. What sets delivery apart is its proprietary tech platform that optimates routes, enables real-time tracking, and manages millions of deliveries daily. With a vast last mile network and data driven efficiency, delivery is well positioned to ride India's booming e commerce growth. Now,
Okay.
going towards Blue Dart dominates India's air express logistics with a 45 to 50% market share, specializing in ultra fast, reliable deliveries. It is known for their same day or next day services. They excel in sensitive sectors like healthcare, handling temperature control, pharmaceuticals, etc. So, being backed by DHL's global network, they offer unmatched international reach.
Mm.
Though more expensive than road based rivals, Blue Dart's guaranteed speed, reliability, and refund backed SLAs, which are service level agreements,
Mm.
make it the preferred choice for critical shipments, proving premium logistics can be highly profitable. Now, TCI Express, it holds a 7 to 8% share in domestic express delivery, but
You can
stands
just
out.
move on to TCA. Yeah, that's okay. Yeah, okay. I'm
Yeah,
saying TCA.
yeah, but stands out with its focused B2B model, serving SMEs that need reliable logistics without large volumes. By minimizing fixed cost and targeting high margin express services, TCI Express shows that profitability comes from strategic focus and efficiency and not just market share. Now moving on to VRL Logistics. VRL Logistics holds a 5 to 6% share in India's road freight, concentrated in South and West India. Rather than going pan India, they focus on regional dominance, offering truck transport, parcel delivery, and even passenger bus services to boost
So
revenue
you're
and
talking
asset
about
use.
TVS. TVS, is it?
No, I'm talking. So I've moved on to VRL Logistics.
Okay, VRL.
They,
Sorry, sorry.
I will repeat. So
Yeah, yeah.
they hold 5 to 6% in share in India's road freight, but they only focus in south and west parts of India. They focus on regional dominance, offering truck transport, parcel delivery, and even passenger bus services to boost revenue and asset use. Their deep network, density, local expertise give them an edge over national players. By choosing depth over breadth, VRL shows that strong regional focus can be just as successful as nationwide presence. Now, Transport Corporation of India, it holds a 4 to 5% in organized share in organized road transport and 3PL, like third party logistics, making it one of the India's old and most established logistic players. With nationwide road transport, large warehousing, full supply chain solutions, and even coastal shipping, TCI offers true multimodal logistics. Their long legacy builds trust and strong corporate relationships, but also challenges them to modernize against tech-driven rivals. Now, so going on to TVS Supply Chain Solutions. They hold a 3 to 4% share in India's 3PL market, but stands out through vertical specialization, which is basically focusing on a specific industry. So they do a vertical specialization in the automotive sector, backed by the credibility of the TVS group. They go beyond transportation to offer end-to-end global supply chain management, often through long-term contracts with automakers and component suppliers. By deeply understanding industry cycles and challenges, TVS acts as a strategic partner rather than just a vendor, creating higher margins and stronger customer loyalty. Now, Gati Limited, or also known as All Cargo Group, hold a 2 to 3% share and follow a diversified logistics strategy. They offer express delivery, e-commerce logistics, general supply chain solutions, and specialize in cold chain logistics. With India's cold chain gaps, Ghati's refrigerated trucks and temperature-controlled warehouses allow premium pricing. By combining speed and cold chain capability, Ghati serves a very niche market, needing both fast and temperature-safe delivery. Sorry.
आपके ग्रुप में कितने लोग हैं? दो है ना?
Yes, sir.
ट्रेन से
Yes, sir.
अच्छा, ओके ओके, कंटिन्यू
Yeah.
प्लीज.
Yeah. So now moving on to the last company, which is Mahindra Logistics, which holds a 3 to 4% share in India's 3PL market and leverages the strength of Mahindra Group. They provide contract warehousing, outsourced logistics operations, and employ transport while investing in electrical vehicle logistics to align with sustainability trends.
ओके.
By combining traditional logistics with e-mobility and green initiatives, Mahindra Logistics positions itself for future growth, appealing to clients seeking lower carbon, technology advanced supply chain solutions, despite its modest current market share. Now, moving on to the uh,
Cost.
cost
And
logistic side.
now, so we'll talk about the breakdown for cost, which is again being in the logistics industry. This is one thing which is very crucial. So, based on our analysis, fuel is what we feel is the largest expense, making up about one third of operational cost, as you can see. And this mainly covers diesel for trucks, CNG for the city vehicles, and electricity for EVs. Next, we have fleet maintenance and repairs, which is the second largest cost for logistics. This is basically where the companies include services for their trucks, tire and brake maintenance, and their engine and part repairs. Third is driver and employee costs, which make up about 9 to 11%. This is your driver salaries, warehouse staff, driver allowances during trips, and training costs. And the advantage here is that labor costs in India are still 60 to 70% lower than developed countries, giving Indian logistic companies a cost edge in comparison to the international competition. Coming to warehousing and handling, they account for 10 to 12%. This includes the rent, electricity, material handling equipment, so the jacks, forklifts, which are used to handle the shipments. Next, we have toll and road taxes. This accounts for 4 to 5%.
Okay.
This is mainly where trucks they pay entry taxes for certain cities, the vehicle registration, and there are of course highway tolls are there in every 50 to 100 kilometers. Next, we have selling and distribution. This accounts for 5 to 7%. This is mainly the sales team's salaries and commissions, your marketing, advertising, which the companies do. Next, we have lease and rentals. This accounts for 7 to 9%. This is mainly leasing trucks and instead of buying. So, sir, I would also like to mention that TCI Express is asset light, meaning that they are one company which they don't have their own trucks. They basically do leasing.
Okay.
Now, coming to technology and IT systems, they account for 3 to 4% of the total cost. This is mainly your GPS tracking on vehicles, which is done, and your cyber security, software licenses, etc.
Okay. Okay.
And we come to depreciation and finance. They account for 7 to 8%. So depreciation, because the trucks and equipment, they lose value over time. So let's say 8 to 10 years. So example, if a truck is for 30 lakh rupees, it'll lose 3 lakhs a year.
Mm-hmm.
And finance cost is basically uh, interest on loans for trucks and warehouses.
Okay.
So all in the Indian logistics industry, companies for if they've taken 100 crore loan, the interest alone can be 10 to 12 lakh, 10 to 12 crores.
Okay. But Sharansh, what is the total number of experience you have in this industry? I mean, because you are doing such kind of a, you're exposed to this business. So how long you have been in this business?
Sir, I've been analyzing logistics throughout the summer vacation, June, July, and I made my investment in one of the companies in August.
Okay, okay. So this year only
And
you have made some investment, isn't it?
yes, sir. So I made
Is
my
it a new
investment in.
company? I mean, or it's an existing company where
Sir,
you,
I've made my investment in VRL.
okay. It's a listed corporate?
Yes, sir. It's a listed corporate, and they are they only operate in the south and west.
Okay.
So
So
they
you
don't.
you own just a few percentage of shares because it's just you're a pure investor, isn't it?
Yes, sir. Yes, sir. Pure investor.
Okay. But the way you have explained, it looks like, that you have some a good knowledge about it because I think you have either done a good research or you have been practically involved in doing certain things. So was it a kind of a research or some practical?
Sir, just research. So I've just actually it's been a year almost. So I do both fundamental analysis and technical analysis. So we have to present our analysis and our recommendations. Further, in our presentation, we have done technical analysis, and our assumptions are based on that technical analysis. Obviously, keeping in mind the fundamentals.
Okay, good, good so far.
Krishna, you can talk about the valuation metrics.
Yeah, I will go with the valuation metrics.
थोड़ा इसको और
So,
large कर दो. I mean,
Yes.
make the font size little bit more this thing. Okay, so logistics valuation.
yeah, so valuing logistic companies requires a different lens than retail or software.
Okay.
Since logistics is asset heavy and capacity driven, the most effective valuation approach is EV
When you
per
say
capacity.
capacity, I mean before we go into this thing, so capacity may mean different for different companies, isn't it?
Yes, sir. Right.
Yes, sir.
Okay, so for delivery, it will be, the shipment capacity, isn't it? How much cargo or how many parcels they can handle.
Yes, sir.
Yes, sir.
Okay, for Blue Dart, it will be again a sort of a same kind of a thing.
Yes,
Okay,
sir. So for Blue
Yes.
Dart, it is ton by kilometer,
okay,
and for you got it right for
So
delivery
it's right.
because they are mainly do shipments.
okay, and then just go to the first one. Okay, I'm just having a just a cursory look. Okay, like
Yes, sir.
logistics, it's per ton capacity per kilometer. Container is per TU. TU full form is what?
So TU full form is 20-foot equivalent unit. So it's a standard measurement we've
20
mentioned
foot
here.
equivalent unit. So this is a 20-foot container or what?
Sir, yes, sir. Container Corporation, their standard use of for logistics transport is a 20-foot container that they use.
Okay. So this is the normal size of the container, 20 foot. So everything is converted
Yes, sir.
into 20 foot, whether it is a
Yes,
liquid
sir.
20 or 40. So you convert all the capacities in, a common this thing denominator of 20 foot. Is that?
Right, sir. Right, sir.
Okay, okay,
Yeah. So continuing, since logistics is asset heavy and capacity driven, the most effective valuation, as we just heard, is EV per capacity. Here,
okay,
enterprise value is essentially what market cap plus debt minus cash is divided by the company's operational capacity. For parcel logistic players like Delivery and Blue Dart, capacity is measured by the number of parcels handled annually. EV per shipment shows how much the market values each parcel delivered. Blue Dart often trades at a higher per shipment value because of its premium express positioning and stronger pricing power. For freight transport, for freight transporters like VRL Logistics and TCI Express, the key capacity measure is ton kilometers, T kilometers essentially. While these multiples help investors quickly compare whether a company looks undervalued or expensive. Of course, utilization levels, fleet age, customer contracts, geography, and growth trajectory all impact value per capacity. A company running at 90% utilization is worth more than the one running at 60%, even with the same capacity. Still, EV per capacity remains the most insightful and widely used metric for analyzing logistic players, giving investors a direct view of how the market values each unit of delivery, freight, or container handling capacity.
Okay.
Yeah. Now moving on to the logistics industry. Shreyansh.
Sir, after presenting our views on market share, growth, logistics, and the valuation matrix that will be used for each company, now we come to our analysis of the seven companies which we've picked up. So
Okay.
first
Show me
we
the
come.
first column. I mean, B column. I mean, let's start from there only. Yeah. So in terms of market cap and just show me the market cap of each company.
Yes, sir.
Okay. So the market cap, if you look at then CCI has 42,000 crores of market cap.
Right,
Second
sir.
is delivery, then Blue Dart, then others are very small. So they're all like mid caps, kind of, or small caps basically.
Right, sir. Right.
And EV is also okay. Sales are 8,000 crores, 9,000 crores, 5,000 crores, 10,000. Who's having 10,000 crores?
Sir, TVS Supply Chain Solutions.
So they are having a very good sales, but their market
Yes,
cap
sir.
is, very
Yes,
less.
sir. Yes, sir.
Okay. So then we talk about EBITDA. So in terms of EBITDA, again, CCI is having the highest EBITDA. Okay. Okay. EBIT. Then, we have earnings. Okay. So now you go ahead, please, with your analysis.
Yes, yes, sir. So, sir, for coming to Container Corporation of India,
Just show me
when
the,
we.
just show me the first, the growth, kind of an
Yes,
outlook for all the companies where you have shown the growth. No, just go on the first column itself. First
first column.
basically. Yeah. उसमें जो अलग-अलग करके growth है ना, मतलब जो अलग एक ही उसमें column में आ जाता है.
Sir, yeah.
So, which company is, growing? Delivery is 79% growth, you're saying.
Yes, sir.
And there was another company, 349. So, which is that 349?
Sir, again, it's TVS Supply Chain.
Okay. So, and if it is 349, the PEG ratio is coming 0.29. Okay. And there is no beta for that company.
No, sir, no beta.
Okay. No, beta has to be some number, no? Either, I mean, it will be very close to zero
Sir,
or
looked up beta from the top stock research. So we've
okay, okay.
taken
Fine, don't worry.
insight
Okay,
from.
I was just
Yes,
inquiring. So,
sure.
okay, so growth is good. Okay, now, I mean, continue, please.
Okay. So first coming to Container Corporation of India, based on the fundamentals, if we first talk about the valuation, their EV EBITDA is 16.9x times, which is reasonable as compared to the peers.
Okay. EV EBITDA
But
किसका कितना आ रहा है EV EBITDA? 16.9.
16.9x time. Yes, sir.
Okay, whereas the median is about 15.5, you said, okay?
Yes, sir.
Okay, almost, average basically.
Yes, sir.
So it
Yes,
falls
sir.
somewhere in the middle.
We wouldn't call it cheap, but moderate.
Moderate, okay.
Then coming to PEG 2.31, it indicates that it's fairly valued.
Yeah,
And coming to growth, 13.9%, what we feel it's steady, but it's not high. It's not a significant high growth.
okay,
Uh, Coming to risk, beta is 1.2, which we would term as moderate risk.
okay,
So this was an overview about the financials. Now coming to the technical analysis. So, sir, if you see here, the stock has been in a downtrend from October 2024 to September 2025.
okay, fine.
This is, and the values are almost below the 200-day moving average. So, sir, the gray line which you see is the 200-day moving average, which is basically that each day the closing price for the past 200 years, every single day has been more.
Okay, so the last 1 year it has been all, below
Yes,
the
sir.
200-day moving average.
Yes, sir. So, which basically means that there is a bearish momentum right now.
Okay,
And
fine.
since both 50 and 200 DMA are declining, this is mainly why there's a bearish momentum. Consolidation can be seen near 550. So if you see, there's ample number of volumes near the 550 mark.
Okay,
So which is basically a support zone, but there's been no breakout.
okay,
The stock has been it neither grown, neither it has declined from September.
Hmm.
So an upside potential is limited.
Okay.
So our final recommendation is, because the stock is in a consolidation phase, while it has shown resilience, the momentum isn't strong to justify aggressive fresh buying. So what we would recommend for the investors is that they should hold for now. Obviously, the company is good; it is backed by the government, but as in terms of in terms of an investor analysis, if we see a confirmation of a reversal, only then it is better for the investors to invest.
Okay. And
So
again, there you said there's some kind of GST benefits which have accrued, but
yes, sir.
even with the GST announcement, they haven't done so well. I mean, just show me
Yes,
the chart.
yes, sir.
So, like this is if you look at any chart of any stock in India, it was like, from October till, December, the stock have been coming down because the market came down and then the market started going up somewhere, January onwards. And
Yes,
then,
sir.
I mean, of course, after the GST announcement, some companies have done very well. Okay. Some have not done.
Yes, yes.
So it's
So,
good to
so
discuss.
it's
Yeah.
this company is stable for long term, but currently, what me and Krishna feel is that the investors should currently wait for a better entry point in order to maximize their returns.
Mhm. Okay. Fine. Chalo,
Krishna,
go
we
ahead,
can
please. Go ahead.
talk about Blue Dart now.
Huh.
Yeah, now going on to Blue Dart, as we see the financials, they have a PEG ratio of 2.08, which is
And growth is
uh,
phenomenal. I mean, Blue Dart,
yeah,
Yes, sir.
26.18 percentage of growth, you said.
26.18.
Yeah.
Yes, sir.
Yeah, and their which is like the growth has been extremely strong and healthy. Their valuation, as we check EV by EBITDA, is 15.5, which is reasonable.
Hmm.
But their PE ratio, 54.56, is expensive.
Yeah.
So
It's richly valued, I
like
mean, at the
they're
moment.
slightly overvalued in the
Yeah.
like that's the basic analysis. For the risk that you take, the beta is 1.22 with the standard deviation of 19.6. So it's like moderately volatile.
Hmm.
Now, looking at the technical view, there has been a clear downtrend since October 24th, where the price at like 5,800 to 6,000, it was below like essentially the
So
markets were
this is
bearish.
also, below 200-day moving average most of the
Yes,
time.
it was also similarly, as we see, like across October to till like August, it has always been like down the 200-day moving average. So like a um, so like a death cross is like confirmed. Like that's what I'm trying to say. Where we support at like 5,600, 5,700, but there is like resistance at 6,400, 6,600.
Hmm.
So the stock has been in a sideways pattern. This indicates that the fresh entry should be avoided unless it breaks the 6,600 level with strong volume. So,
Okay.
so the recommendation is to hold. It's a strong company with steady fundamentals and a premium positioning, but valuation concerns make it suitable for fresh buying right now. Investors can stay invested and look for a breakout as a signal for adding.
Okay.
Sir, again, the death cross is a technical term, because while I'm still learning, so death cross is basically where the 50-day moving average, so 50 days moving average is basically for the short term. So the
Yeah.
yellow line. So
Yeah.
where, sir, if you see here, the 50-day moving average is, it is falling below the 200-day moving average, which is
Yeah.
the long term trend. So it's basically showing that it's a death cross because the momentum has shifted downward
Yeah. This
from
is Blue
December.
Dart. Blue Dart.
Yes, yes, sir, Blue Dart.
So it has entered into a kind of a zone where it's a downward zone, basically.
Yes, sir, yes.
Okay.
Yes, so that's why the recommendation is to hold right now.
Okay.
So now we'll talk about delivery. So delivery, sir, growth is the second highest, which is we can say that it's strongest among the peers.
Yeah.
And when we talk about their valuations, uh, EV by EBITDA is 40.8x and PE is 197.6x,
Okay,
and
very
PEG
nice.
is, yes, sir, and PEG is 2.48. So even after their growth, even after being a lead market share in online shopping industry, it's slightly overvalued even after growth.
Okay,
And talking about the risk, beta is zero, but standard deviation is 78.5. So
very high.
despite a low market correlation, they're extremely volatile.
Hmm.
And if we talk about delivery's technical view, so here there's been a strong downtrend till April, as you can see,
Hmm.
and then there's been a sharp reversal, and now it's at new highs. So it's been trading almost till 490 and 500,
So this
and which
started
is,
when? This started somewhere in
yeah,
January, February, okay?
yes sir, yes sir,
When the uptrend began, okay? And now the
yes,
uptrend is continuing and it
yes sir.
keeps going up basically.
I,
And it is
yes,
the share price is above both the averages, short term as well as
yes
long
sir.
term.
So
And
yes sir,
there's a
exactly,
golden
sir.
crossover which happened, somewhere in
Yes
January,
sir.
February. Okay.
Sir, yes, sir. Because the price has been after April, the price, if you see, it's taken some time. Then June onwards, it's been trading above both the 50-day moving average and 200-day moving average, which is why this is showing that it's a bullish momentum.
Okay.
But still, sir, the stock has been volatile, and of course, the standard deviation values are very high. And being an investor, this looks attractive, but again, from our point of view, we would still recommend a hold, because if it is good if you're already invested, because it then makes sense to take profits and re-enter on dips. But
Okay. So
delivery,
maybe
it
that it
has,
has run ahead of the fundamentals and it is trading at a very lofty valuations.
yes, sir.
So people who are going to enter, they are not going to make
Yes,
much money as
yes,
such.
yes, sir. Yes, sir. Sir, it's beneficial for people who might have entered when the stock was trading at low. So I,
Which
when,
company it is? Which company it is?
sir, delivery.
Delivery. Now, with all these things happening, GST going down and then
Yes, sir.
income tax benefit, all that will lead to a kind of a growth. But already this stock has, run ahead of the fundamental. It has given the kind of a, up move well in
Yes,
advance.
yes,
Okay, so no point now investing in this stock, as you're
yes,
saying. Okay,
yes, sir. So delivery, in my opinion, it has good long-term strategical opportunities, again, because of the points you mentioned.
yeah,
But in the near-term profitability and stock volatility, they remain a concern for the investors.
okay.
Krishna, we can talk about TC, Transport Corporation of India now.
Yeah. Yeah, so moving on to Transport Corporation of India, we can see that their P ratio is 20.9, which is fair, but not cheap, but reasonable. While their PEG ratio is 1.92, slightly overvalued.
Which is this
Uh,
company? Transport Corporation.
TCI,
Huh?
yeah,
Transport
TCI, sir.
Corporation. The P ratio is 20, okay, which
Yes,
is
sir.
quite reasonable compared to the industry, okay.
Yes, sir.
And as you
And
said, the
their,
growth is
uh,
10%, so growth is just okay.
yeah.
Okay,
Like it's moderate, while the risk that you take, although the risk that you take, it's only zero point 0.3, the beta is zero point 0.3, which is like very stable and low risk.
okay,
So looking at the technical view, we can see that it has been moving above the 200-day moving average.
okay.
Actually, there
The
is a
the the
golden
yellow one
cross.
is the short-term moving, and the darker one is the 200,
Yes, sir.
isn't it? Okay.
Yes, sir.
Yes, sir. Yes, sir.
So it has
Yeah,
been
so
above
we,
200 for quite a long, and there was some kind of a crossover happening, you know, somewhere in April, before
yeah,
April it happened, and then the 50-day had gone up, and 200 it's maintaining over 200. And currently also the stock
yes,
is
sir.
above its both this thing,
Yeah.
short term
Also,
moving.
so the if you look at it, the 50-day moving average has constantly been above the 200-day moving average,
Hmm.
which confirms the bullish movement.
Yeah.
So, like we can easily support it, like support at like 1080, 1100.
Hmm.
Although there is some resistance at 1250, 1280.
Okay. So despite the fall which happened sometime in between February and April,
Yes, sir.
though the stock has down below both the moving averages, okay, and then it
Yeah.
picked up thereafter.
Yeah. Although so essentially, although this may not offer you like high growth although this stock may not offer you high growth, but it shows a solid structure with like a steady momentum.
Mm.
So the recommendation here is to buy, like till the buy, we are saying to buy because while the growth may not be explosive, TCI offers steady returns, healthy balance sheet, and strong
What's the
fundamentals.
current price of TCI?
Sir, it is like it's in the chart, sir. If we just look at it
Just
here.
show me this thing, the recommendation of the trading view. Have you got it? What trading view is saying? I mean, recommending. क्या दे रहा है?
Sir, I'm recommending here to buy because, sir, although this stock is like
Price
not
target
like
is
a very high growth.
1374.
Yes,
So,
sir. Yes, sir.
okay, okay,
So currently it's at 1215.
okay, okay. ठीक है.
Yeah.
Anything else? I
Yes, sir.
mean, you're just closing down it, or you have finished it almost?
So we have three more companies.
Okay, okay.
So coming to TVS supply chain now, even first I thought that being part of TVS, it might be something which can be very interesting. But unfortunately, when we look at their P 99.8, which is very
Mm,
high,
very high.
and then we come to PEG, the PEG ratio is 0.3, which appears undervalued relative to extreme growth.
So is that they're growing at this? Just show me the EPS growth. I mean, the bill chart of TVS. So it was like 3.6. So this is the one. Okay. Okay. From point 0.3, it went up to
Yes, sir.
3.2. So there was a big growth happening in 25. And thereafter, the growth is moderating a bit. I mean, not, I mean,
Yes, sir.
it's almost doubling from 3.2 to 6.4 from 2005 to 2000. So, okay. So if you just exclude the first year growth from two, then the growth would be just about, like 50% or 40% growth continuing basically. 34 and
Sir,
49.
yes, sir. So this is because when we come to TVS, this is because they what we feel, me and Christoph, is that they might have an erratic earnings base, which basically means that the profits they fluctuate, and it's very unpredictable because it's mainly that the profits they go up one period and they come down one period. So it's not very, they don't have steady consistent earnings, even though their growth it's a significant growth, but their earnings are not consistent.
Mhm. Okay.
And this is can be mainly due to seasonality or their volumes. They don't have enough volumes.
Mhm. Okay. Go ahead.
Now, so coming to the technical analysis, there's been a sharp downtrend from 200 to almost 120, 125. And this is again, so if you notice, it's trading below the 50-day moving average and 200-day moving average, showing there's a bearish momentum.
Mhm.
There's a small base forming at 110 to 125. So if you see, there are large volumes
Okay.
between 110 to 125 rupees. But again, we cannot comment because there's been no breakout.
Okay.
So our final recommendation is that the stock is in a bearish momentum right now, and with there's no signs of reversal. And even though it indicates a downtrend and it lacks the strength, what we wouldn't recommend a hold, we would recommend a sell, because even though they have huge global presence, being part of TVS Group, but as you can see, so they are financially weak, and investors can rather look for better opportunities in comparison to their peers who have stronger margins and growth.
Okay.
Krishav TV, TCI Express.
Yeah. Now going towards TCI Express, if we look at their technicals, like their P ratio is 31, which is moderately reasonable for this sector, while their PEG is 2.46, which is slightly overvalued when it is kept relative to growth. So growth is 12.6%, which is steady and healthy, while their risk is moderately volatile as their beta is 0.84. Now, going towards the technical view, there has been a downtrend from 1200 to 700 over the past year. If you look at it, both 50-day moving average and 200-day moving averages are sloping down, which show a bearish, which show that there is a bearish intent. volume spikes. There are some volume spikes without any as such of breakout. There is a base forming at 670, 720. There is a support also during a similar price range, while there is a resistance at 775 to 800, which is essentially the where the 200-day moving average eventually comes towards.
Okay.
The stock has like more, as we see, the stock has moderate growth outlooks with no strong breakout signals. Therefore, the recommendation is to hold. It is a steady business with decent valuations, but nothing exceptional to warrant a buy at the current moment. Therefore, investors should wait for stronger growth catalyst. Yes, sir.
Yes,
Now,
so talking about VRL Logistics, this is the company I have personally invested in,
Okay. Okay. Yeah. So
and
what is the growth of this company? How much is the growth? 12.77, isn't it?
yes, sir, their EPS is also, if you see, there's almost 12. It's not that great, but it's still a decent growth.
Now, growth is there, but if you look at 25 onwards, the growth is moderating a bit, isn't it?
Yes, sir. So, but if we talk about their valuations, why I invested in this is because if we compare it to all their peers,
Hmm.
they have a fair valuation, and their PEG, which is 1.81, is also reasonable relative to its growth. And
Okay.
again, the growth percent is 12.8, which is healthy and consistent.
Hmm.
And if we talk about their risk, their beta is 0.26 and standard deviation is 6.88. So they are very defensive. Their risk is moderate and it has low volatility.
Okay. So show me the
And
chart. Show me the chart.
yes, sir.
So it is not somewhere it is getting, blurred somewhere again.
Yes, sir. So if we talk about the technical view about VRL, there's been a downtrend till April, as you can see,
Yeah.
and then there's been a strong reversal with prices almost breaching, sir, because of the blurriness, but you won't be able to see it, but the price is trading above 250-day moving average,
Okay.
and price has almost peaked till 320.
Okay. So what's the price? I mean, what price it is trading? Around 300 something, is it?
Sir, it was the 320 till August,
Okay.
and right now there's consolidation that's going at 280, 290. Currently the price is 274.
Okay.
So 50D, so again, the 50-day moving average is above the 200-day moving average, showing a mild golden cross. It's mildly bullish, but there are strong volumes which indicate that there's accumulation and the stock will go up.
Okay.
Our final recommendation for VRL is that it shows a stable structure where in terms of fundamentals, it has low risk compared to all its peers. It is less volatile and it offers a predictable growth.
Okay.
Yes,
See,
sir.
good. I mean, I think your presentation was, I mean, very good. You had gone through all the parameters and
Yes, yes, sir.
done a good research. Okay. And so पहले कभी आपने ऐसा research करा था? मतलब was it a good research for you for the first time, or you have done research earlier also?
Sir, I've done it before for the wires and cables industry.
Okay, wires and cables industry. Okay, okay, good. Chalo, it was wonderful. So, are you through with your presentation?
Yes, sir, we are through.
Okay.
yes, sir.
So now who is the second one? Who is going to present? I mean,
So
so,
group five,
huh?
group five.
Sir, it
So,
was
अच्छा
group
तो
4.
अभी 12:15 है. So can we do it little after a I mean gap of 10-15 minutes?
Sir, I have one more presentation, sir, at 12:30, sir. So
Okay, अच्छा तो आप शुरू करना चाहते हैं? चलो लगा दो आप एक सेकंड. You can just
Um,
present here.
Sir, actually, we also have a thing. I mean, Shreyansh had an